The Batman and Superman of millionaire investments, Bill Miller and Warren Buffett. Influential people for their knowledge of investments and economics. Men of vision and action. Dinosaurs of the market and owners of important companies. What these emblems of good financial decisions think affects the world economy. Of course, it's not the only thing that affects you, but where Bill and Warren put the money is where the profit is, since these orchestral masters are the ones who manage the market and know business. Both investors today have opposing views on a topic that involves everything from small investments to large sums of money: Bitcoin. Veteran investor Bill Miller says Warren Buffett doesn't understand Bitcoin. The battle of opinions and back and forth between these influential figures in the global economy begins with the discussion about the value of Bitcoin. In a recent episode of the Investors Podcast Network, William Green asks Bill what he thinks of Warren's comments on Bitcoin's stance, condemning it as an unproductive asset with no inherent value. Quote, "The goal of investing is not to own productive assets. The goal is to make money," said the well-known investor, admitting that he sees in Warren's decisions a bias that prevents him from understanding Bitcoin. "I think everyone is biased in one way or another, and they are prone to making mistakes," he said. Quote, "One of them is that they're old and they're not used to new things, and they're not the kind of people who embrace new technologies and different ways of doing things." Warren Edward Buffett is an American investor and entrepreneur. At 91, he is one of the world's largest investors, as well as being the largest shareholder, chairman, and CEO of Berkshire Hathaway, a company that's been in business for more than 20 years. Buffett is an expert in value investing. He remembers because it matters. His professional career began in 1950 and 1956 with Benjamin Graham, who is considered the father of value investing, or investing in companies with solid fundamentals and always for the long term. Together, they analyzed stock market reports. Warren stood out from his colleague at that time by analyzing not only the company's balance sheet, but also intangibles such as the brand or the management team. He founded a limited partnership in Omaha, setting himself up for success as he increased his capital dramatically, merging firms and increasing the number and quality of partners, even requiring $100,000 as an entry requirement. In 1965, Buffett acquired part of the textile firm Berkshire Hathaway, under which he would later unify all his businesses, starting with insurance companies. Between 1965 and 1990, he bought several companies. By the late 1970s, Buffett's fame was such that rumors of the genius's interest in a company almost automatically boosted its value. On November 3, 2009, Buffett, through Berkshire Hathaway, carried out the biggest deal in his history, buying the Burlington Northern Santa Fe (BNSF) Railroad Company for $44 billion. In some ways, the investments Buffett has made are very solid in terms of reliability. Companies that, based on their balance sheet and track record, gave Warren confidence in his purchase. Bitcoin in this sense is not like that at all, quite the opposite. Warren thinks Bitcoin is not a good investment. Quote, "If you owned all the Bitcoin in the world and you offered it to me for $25, I wouldn't buy it," Buffett said. "Because what would you do with it? I'd have to sell it to you one way or another. It won't do anything. If you can't hold and continue the same value steadily or increase, it's not a good investment strategy." Does this make sense to you? Well, for Bill Miller, no. William H. Miller III, born in 1950 in North Carolina, is an American investor, fund manager, and philanthropist. He served as president and chief investment officer of Legg Mason Capital Management, as well as senior portfolio manager of the Legg Mason Capital Management Value Trust. He is the portfolio manager of the former Legg Mason Opportunity Trust mutual funds, now housed at his own firm, Miller Value Partners. Miller graduated with honors from Washington and Lee University in 1972 with a bachelor's degree in economics. Earlier in his career, he worked as a treasurer for a company that manufactured inputs for the steel and cement industry while studying philosophy at Johns Hopkins University. Like Warren, he began his career in equity research at Legg Mason Capital Management, where he received the CFA designation in 1986, and in 2007 was elected the firm's president and chief investment officer. His career at Legg came to an end in 2016. Miller considers himself a value investor who believes that, quote, any stock can be a value stock if it trades at a discount to its intrinsic value. Legg Mason Capital Management Value Trust's after-fee performance outperformed the S&P 500 index for 15 consecutive years, from 1991 to 2005, an index that Bill credits as his greatest achievement. Bill was one of Amazon's biggest investors when no one believed in the company, and in fact, it was thanks to them that he recovered his fortune, when in the 2008 financial crisis, he lost 90% of his capital. In November 2008, the e-commerce giant's shares were worth less than $40. Now, in recent trading sessions, the stock is trading at around $3,300 per share. Miller recently confessed that his stake in Amazon represented 83% of his personal portfolio, and that he had probably become the largest single shareholder after its owner, Jeff Bezos. As for Bitcoin, he is confident that it will grow tenfold the moment, quote, investors recognize that it is far superior to gold. If you've made it this far and are liking today's content, why not leave a like so the video can be recommended to more people? This way, others will be able to reach out and explore the various videos on the channel. Ready for that thumbs up? Okay, let's move on. Bitcoin is a payment and cryptocurrency bank created in 2008 under the pseudonym Satoshi Nakamoto. In principle, Bitcoin users can transfer money to each other over a peer-to-peer network using free and open-source software. Transactions are verified and cryptographically protected by a decentralized network of volunteer nodes, which record the account history in a public database known as a blockchain. This currency is incredibly volatile, and just as it has gone up and will generate incredible profits, new millionaires all over the world, it has gone down without warning. The reasons? It is a currency that has no backing. It is only valid because many buy and mine it, without knowing exactly how it works and without asking too much, as it allows anonymity among users, but also tax evasion and free transactions under pseudonyms that allow a semi-anonymity, with the risk that this entails cyber scams and millionaire thefts. This week, it has woken up generous, and one Bitcoin is trading at $30,000. And by waking up, I mean it is up, because it has been going down for weeks, which makes Bill Miller keep calling it an insurance policy against financial catastrophes. The Wall Street legend bets big on Bitcoin. Quote, the connection right now is with risk and risk aversion. So when the market is doing well, Bitcoin goes up, and when the market is doing poorly, Bitcoin goes down. And I think those correlations can keep bouncing back. Miller slid in dialogue with CNBC about the price of BTC. He also said that if BTC were to trade at half its current price, which is around $30,000, he would not be surprised either, although he would not like it at all, because it would affect a significant part of his own portfolio. In this context, it is understandable that Warren Buffett does not want to risk his investments, because his profile is simpler and more careful than that of the legendary broker Bill Miller. You can agree with Warren or Miller, possibly both know what they're doing when it comes to investing. Warren bought companies and invested in assets. Miller bought and sold stocks. Both investors today are on the list of the richest men in the world and are very influential in the world of economics. Bitcoin represents a risk, but knowing that a billionaire investor has put half of his capital in it gives you confidence to buy some. Go for it, to each his own. Quote, "I think you have to think of them as risky investments. Most of them won't work, and the few that do work will do very well, but I don't know which ones they are," Bill Miller said. Others, like Elon Musk, prefer not to accept cryptocurrencies because of the high degree of pollution from mining them, as well as other cryptocurrencies. A single Bitcoin transaction consumes up to 1,122,196 Visa card payments, equivalent to 36 days of electricity consumption in the average US family home, and equivalent to watching YouTube for 84,388 hours. It is estimated that only 40% of the energy consumed by cryptocurrencies comes from renewable sources, and the remaining 60% comes from fossil fuels. If the price of cryptocurrencies were to increase, electricity consumption would also increase. If ecology rules your life, this is not your currency. Cryptocurrency-like investments were invented to counter inflation and to be able to cope with economic crises. In fact, the creation of Bitcoin was in 2008, the year in which the crisis that directly created the bursting of the housing bubble in the United States in 2006, which led to the subprime mortgage crisis in October 2007, was consolidated. Then internationally. The world of cryptocurrencies is to be explored. It is an alternative for those who inflation and crises do not allow them to save. But it must also be done with great care, as it is volatile and dangerous. With its pros and cons in sight, it only remains to think what investor profile we consider ourselves, as none of us have the capital of these men to risk and lose. But at the same time, we won't have it if we don't try. Thank you very much for sticking around until the end of the video. Subscribe and give us a like. See you next time.